Welcome back, fellas, to the Coast to Coast Traders podcast with my boy Joe.
What's up, man?
And how you doing, Joe? You have a
I-
good week?
I'm good, Robbie. My week was okay. Tuesday was pretty rough. Wednesday, Thursday, just chilled. Friday was good. Back at the desk, live streamed for the House Stacks and had some really good trades. I got to upload that video. But how about you?
Pretty good as well. And just mostly focusing on getting back to the old Robbie. So feeling good about the week, and overall, my trading performance in general has been quite a bit more disciplined than it has been. So
Nice.
Um, I think it's looking up, but our topic today is to be about lost statistics.
Yeah.
And do you want to kick that off with what you saw in the group, that post?
Yeah. So actually, it was cool that somebody he messaged me this first, and then he ended up sharing it in the group. But shared a message. I think it just comes from the Discord for the futures desk, one of the prop firms out there. And
Yeah.
the first guy started off with a small but useful stat I have found for myself just now. For 11 out of 15 trading sessions, if I lose more than 35% of my daily loss limit, then I will keep losing in that trading session. So that's really interesting. And like before we get to like that second comment in there, what I said to the guy who said this to me was, that's really interesting about that, but I think that it's not going to apply to most people because unfortunately they probably don't set a daily loss limit.
Yeah, that's fair.
Which is funny but
That's a
sad.
big thing.
Mm-hmm.
Yeah.
Mm-hmm.
So why don't you go ahead and fill us in with the
Sure.
futures desk guy response?
Yeah, so the guy, I think it's the guy who runs the futures desk, he just literally said, also as a whole, traders who take a maximum of 1 to 5 trades a day are up to 10% more likely to end green on the day than everyone else. That's just based on our stats. So basically compiling the stats from the futures desk.
Yeah,
What do you think about that?
I think it's interesting, and to some degree I agree, but it also could depend on how you define a trade.
Okay.
Because with Top Step, if you're sizing into a trade, then each scale is considered a trade rather than it counting the initial execution of the trade
Mm-hmm.
as one. Does that make sense?
Yeah. Yep.
So yeah, it could depend, but I definitely agree to some degree in this area, because I know that when I keep the number of my trades small, then usually it ends up being pretty good, whether or not it's a red day or a green day. Obviously, if it's a red day, the trade's going to be small because I do honor my daily loss limit.
Mm-hmm.
Um, but when it's a green day, you'll see days where it's like, oh, it's like 10 trades, and those are possibly days when I ended up getting red, back to green, kind of digging myself out of a hole.
Mm-hmm.
So for me personally, this does resonate with me, but the 10% part, uh, I mean, 10% isn't insignificant, but it does seem a little insignificant. What do you think?
Yeah, I think that in the grand scheme of things, that everything that trading encompasses, 10% is, 10%, variability is a pretty insignificant number, right? Like, I also
Yeah.
think that that was one of the things to just go back to Top Step was one of the things that I despised the most about Top Step, the way they counted your trades, right? Like,
Yeah.
I would prefer that they counted it like if you entered once and you exited twice, like a halfway scale out, or if you had two minis or two micros, and
Hmm.
that's one trade, right? And
Yeah.
for anybody who would be, if you were manually logging your trades or if you were reviewing your trades in trading software, it's going to come up as one trade. You're going to log it as one trade.
Yeah, for sure.
So I would hope that he's referring to that the exact same way,
Hmm.
like how we would be considering it. But that's 10% more than everybody else. So does that mean that my odds of being green are going to go down like the same if I take 6 trades or if I take 16 trades?
Right.
It's
That's a tough one.
yeah.
But I mean, I could just look at my own dashboard really quick and just say, look, uh, Friday, 2 trades, really great day.
Mm-hmm.
Or last Friday, really great day. But
Mhm.
then like the day before it was 7 trades, and it was still a good day, but it was like half of Friday, you know.
Okay.
And then I had trades earlier this week where just 3 trades, and it was just a decent day. But then a couple of losers, but those are my max loss days, so I honored those. And then Friday was a green to red to green day, and
Mhm.
so that was 8 trades, but it was a really solid profit day. But like if I hadn't maybe jumped the gun on some other trades, then
Yep.
maybe it wouldn't have been green to to red. And so it's one of those situations where I can understand, like, with the first person saying 11 out of 15 of his trades, soaking into that drawdown, he's probably going to have a losing session. But I think that could tie into some emotions because I was feeling something similar on Friday as well. It's like, okay, well, shoot, if I take on this next trade and I'm and it's going to be a loss, well then for sure this is probably going to be my last trade of the day, because yeah, maybe I'll have a little bit more drawdown, but it's not going to have enough to actually warrant a full risk of trade for me.
Mhm.
But my emotions are probably intertwined with the fact that I had some losses. So even though the setup was there, if I hadn't taken a couple of losses just back to back, I probably wouldn't have been sweating that trade as much. But at the end of the day, I did accept the risk, and it ended up being quite the hero trade for me.
Yeah, yeah, it was really good, dude. Like that was like really damn good. Really damn good. Hmm.
And
Yeah.
I think it falls into the category of first, second, and third order consequences, which is something I've been reading in Ray Dalio's book Principles,
Yeah.
which I did end up finishing, by the way. But
Okay.
the idea is that a lot of times people really don't see beyond the first order consequences of their actions.
Like
And
like trying in this scenario that would be you're red and you want to go green. That's the first order consequence?
the first order consequence is just whatever happens with the initial trade.
Okay. Okay.
But
Yeah,
then
go ahead.
the second order would be like, okay, but if I do take this trade, well then whether or not I'm red or green, is it still like the A plus setup that I should be taking anyway, right?
Okay.
And the results of you taking your A plus setups is that you probably will get rewarded.
Okay.
It's like it's similar to the saying, I don't see the forest through the trees because I'm only worried about what's in front of me right this moment.
Hmm.
People that are on a fitness journey, they're hesitant to start because of how hard it is and how out of shape they might be. So the first order consequences is that it's boring and
Yep.
it's hard to do,
Yep.
but the second order consequences is that you're going to get more fit and it's going to get easier to do. And then the third order consequences is that you're going to lose some weight, you're going to gain some strength, that sort of stuff.
And then the fourth order is when you finally get dudes compliment you, and then they're like, "Bro, I want to be like you, bro." And you thought you thought it was gonna be nothing but attention from females, and turns out females are repulsed by you, and all the dudes want to be you, and that's it.
That's what social media says.
That's yeah, dude. It kind of really is like that, man. It kind of is. It's funny.
Yeah,
Okay.
it's funny for sure.
I'm so that book that you got that you just talked about by Ray Dalio, right? The Principles book. I got that on Audible, and
Yeah.
bro, I regret it because that's really a book that you need to be able. I feel like read, highlight, like be able to specifically call out like certain sections, and even
For sure.
for me, when I read through books like that, I like to take important sections and notes like that and actually put them in my journal. So,
Hmm.
like rewriting them, which I think helps to solidify the message. So, like, I genuinely regret getting it on Audible. But the first portion of the book where he's going through his history was great on Audible because Ray Dalio is telling you about his whole story and everything, and that was cool to
Yeah.
hear. But like now that I'm in like the book, I'm like,
Right.
I gotta buy
Which
the
is
copy.
funny though, because I actually didn't. So he wrote this back in like 2010 for like as like a company manual,
Mm-hmm.
and it was published for free on the internet. But then the book that's actually available on the shelves isn't the same thing,
Okay.
because the book that you listen to actually has his stories, whereas the manual didn't. So I ended up listening to the book on Spotify because it was included in my premium membership.
Oh, okay.
Um, and so if I hadn't done that, and if you hadn't mentioned some of those things, I wouldn't have learned about the story. Like for instance, the McDonald's chicken nuggets, right?
Yeah, that was dude.
He was
That's so
instrumental
cool.
in helping McDonald's
That's so cool,
start the chicken nugget.
bro. If any of you out there watching right now, you gotta just give the video a like for Ray Dalio bringing you the chicken nugget. Okay.
Chicken nugget, yeah.
Mm-hmm. Damn.
Yeah, because it's really cool to hear the way he was able to understand the market and the correlation between different markets and how that would affect prices of things.
Yeah. Yeah.
And yeah, dude, how cool is it to be like, I mean, whether you love him or hate him, McDonald's is a pretty classic American company.
Oh yeah. Oh yeah.
And I mean, they arguably maybe the best fries in the
Yeah.
world.
Yeah. I think so.
But yeah, that dude, I wouldn't mind to be like a part of that kind of history, you know?
No, I think that's I
Even
think
if
it's really
nobody
cool.
knows you for it.
I think this is
Yeah.
really cool. Dude, you know what's funny is I'll be honest, I had McDonald's today, and the fries were amazing, bro. And tell everybody your McDonald's story from like
Oh,
this
just a
past
couple
week.
days ago?
Yeah, go ahead.
Yeah, yeah. So they have been promoting this new snack wrap recently, and so I just went to pick one up after the office, and I was actually leaving late for the day because I'd stayed to do some database stuff, but as I'm turning into the parking lot, uh, I'm like, I pull up, and the next thing you know, my wife's in front of me in her car, and she's about to turn in, and I'm like trying to like flash my lights to see if she'll even notice me or honk,
Yeah.
and I don't think she does. So I message her while we're at the stoplight. I'm like, hey, I see you. She looks back, and she was in there to get a quick drink before she headed to the library. So that was funny.
That is really funny, dude. That's really funny.
Yep.
Yeah, McDonald's, bro. So I gotta get that Ray Dalio book. I actually gotta get the paper copy because I think it would just suit me better.
Mhm.
But he does have some really like good gems, and I've been using Audible to like you can almost like bookmarks. You can clip a section. It's actually really cool. You can press the button,
Mhm.
clip the exact thing that you want, and then you can re-listen to a certain part. So it's
Oh, that's nice.
yeah, I've done that a few times already, but it's hard. Like if you're driving, it's like I can't like clip this exact thing, so I'm just like kind of hitting the button and then hit save and then go back to listening to it and I adjust it later. But it's pretty cool.
Right.
Yeah.
Yeah, so definitely when I guess at this point we've already talked about that book a few times, but still highly recommended to anybody.
Mm-hmm.
In some ways, I think it's just as good for traders as like trading in the zone, or maybe hot take, but maybe even better than Anna Cooling's VPA.
Mm-hmm. Yeah, I think just like the correlation between markets and the decision, like the part that he talks about there, but really the factors for decision making are really, really key. And I think that
Mm-hmm.
they go well beyond just trading, right? Like you could apply them to business practices, leadership, hiring, right? Which he talks about how he applied it to those things. But
Yeah.
also he talked about like there was a good section there on expected value and how like you use expected value in your everyday life without even thinking about it. Like for example, you're gonna go drive somewhere and you're pretty sure you remember how to get there, but you still check the GPS to confirm that you're right, because like that's like a positive expected value scenario where it will only take you a moment to confirm the directions, but you potentially would lose a whole lot more by getting lost, right?
Yeah, for sure.
So things like that, I think it's pretty good, pretty useful.
Yeah.
So the other part of the loss statistics, though, dude, is looking at some like equations to just understand like streaks, and if you're trading within your system, any good system, right, is going to be taking over hundreds of thousands of trades. Like the probability of excuse me, of having like concurrent losses, right? Because like you could like flip a coin a bunch of times, like maybe 10 times in a row and still get a period of like 3, 4, even 5 heads in a row. It doesn't, each flip is different than the last, right? But in terms of, if you look at it over 1,000 trades, like if you have a 60% win rate, I think what it came up with here was that the probability of 10 consecutive losses, right, is is very, very unlikely, right? You have less than a 6% chance of seeing that across 1,000 trades in a row.
Yeah.
So, and then, as you go through, like, maybe if you look at like 3 consecutive losses with the same win rate, in the course of 1,000 trades, you're probably going to see that come up about 38 times. So, like,
Hmm.
you could reasonably expect, all right, in this 1,000 trades, I'm going to lose 3 in a row 38 different times. So,
Yeah.
um, interesting though. So, like, if you knew you were on a hot streak, right? Because I was listening to this video where this guy was talking about winning 28 trades in a row.
Yeah.
If you knew you were on a hot streak, would you just size down?
Um,
Like 28 trades winning in a
not
row.
not not necessarily, because if it's still the A plus setup, then why wouldn't you just go treat it as just another day?
Right. Right. I think emotionally, probably a lot of people would say, I'd like to hear what people say in the comments, like, yes or no, would you size down?
Hmm.
Because I think emotionally it'd be very easy to be like, yo, I've been running hot for too long. I better take some risk off here because I'm gonna lose, you know?
Yeah. Hmm.
Oh,
I mean, it's not unreasonable to just to to think that way, or maybe even just take a day off
hmm
to like maybe potentially like let some euphoria calm down and just maybe get out of your head and just like regroup for a weekend or something like that.
that makes sense. Yeah, because it could be very
Hmm.
easy to say, oh, I'm running hot, I can't lose, and then you actually end up taking a trade that really doesn't meet your criteria, and then you lose because you just
Yeah,
like you think it or you start to force it or get a little sloppy.
guilty.
Yeah. Yeah, me too. Me too. For sure.
Yeah. Hmm.
For sure it's very easy to chase sometimes. Yeah. And
Yeah, and it's funny you mentioned the coin toss though, because I was recently listening to an old episode
hmm.
of ours, number 11, and we talked a little bit about the coin toss and then the statistics there. So maybe we'll link that in the description. But just there was just some things that we talked about that I had kind of forgotten about as well. You and I mentioned just briefly in pre-chat, and I always find it interesting just to kind of go back over some of our old episodes every once in a while just to see what we talked about. And it's like,
hmm
oh yeah, that was a good conversation. Um, and it just like sometimes you can repeat something, and no matter how many times you repeat it, it's still valid information. You know?
Right. For sure. For sure. Sure. It is valid, man. I
Yeah.
think there's like there's just too many ways to get like slipped up or tripped up, like in like looking at the probabilities or stuff or your emotions or whatever, and
Yeah.
easy to get thrown off. But it's
Yeah. I mean, for sure, because like we want to be in the market to make money, and you see those big candles sometimes, and it's like, okay, this is looking like it's what I wanted to do, but then if you don't wait for the candle closure and that actual confirmation, and you rush it like I did a couple of times last week, then you get smacked down a little bit. But as long as we can, it's as long as we deliberately try to learn from the mistakes rather than continue to make those same mistakes without reflecting on them,
mhm.
then we should generally improve.
For sure, for sure. There's been a few times. It's interesting that you use the phrase like that candle closure because there's been a few times now where I've noticed myself like either I should have waited for the candle to close because it would have set me a big signal, which in hindsight and review of watching my trading on Tuesday, that was a big thing that did me in. Is like not
Okay.
like there were a couple trades where I just should have waited for that candle to close, and I got caught up kind
Yeah.
of like in this sort of like flicker of is it showing me or is it not showing me what the signal I'm looking to see? Take the trade
Yeah.
and take the trade, get my hand slapped
Hmm.
twice, and it just pissed me off.
The funny thing for me is that the couple of days that I told you what my losses were, you're like, "Oh, did you try to take the pre-market high or whatever it was?"
Yeah.
And the funny thing is that like you know me enough, like my trading style and my setups, where
hmm
it's like, okay, it's funny because at least I was consistently wrong, but like I made the same mistake back to back. And again, it was a candle closure issue for me, not waiting for that confirmation.
Hmm.
And if I had, then I could have done something different. But yeah.
Yeah. Yeah, I mean, it's just a matter of like, I didn't know that that was necessarily the mistake you made, but I knew like, oh, this is the setup he probably was looking for, And I guess, and to be fair too, you probably messaged me about that trade like within a few minutes or so of it happening, right? I think.
Mhm.
So like,
Probably.
I kind of had a rough idea of like, okay, what would he have taken generally based off of this most recent price action? And been like, oh, it was probably that, kind of like deducing
Yeah.
it, but yeah, I know, man. We're gonna just keep getting better at it one day at a time. That's all we can do.
Oh, yeah, absolutely.
That's all we can do.
Yeah.
So
Well, what do you say we keep it short and sweet on that?
I love it, bro. I love it. Short and sweet, to the
Yeah.
point. Appreciate you all. Make sure you like and subscribe. And
Catch you on the next one.
that's right. See you guys later.